Hey, what's going on, everybody? We're going to make a quick video on imbalances and liquidity, and this is going to continue on with what we talked about in the notes above in Notion. So let's get started. Okay, we're looking at Thursday's range that was created. We created this high on Wednesday. We came down, we created this low on Thursday at New York Open, and then we were just consistently building orders and moving up. Okay, so the first thing that we want to take note of, and I'm going to suggest that you guys try this, see if it helps. Just going to remove the wicks real quick. Okay. And as we remove the wicks, we're going to take a look at where our imbalances are at. As the market continues to move up and down, it continually creates imbalances, which it will later come back and fill. And it creates points of liquidity, like these swing highs that are put in, swing lows that are put in that get taken out later. Okay, so moving on. So when I look at this chart, I want to note where are my imbalances at, and I can highlight those. So if I look at this area right here, we have a series of down close candles. We have a series of up close candles, and we have a series of up close candles here. So I could say that this area right here is void of any up close candles, and this would be an area that price would want to return to rebalance. As I move further down, we have a series of down close candles. This comes up and pretty much rebalances this immediately and kind of rebalances along the way. There's some little gaps in here. We'll just highlight those gaps to see what price does around these areas at a later point in time. Okay, so I'm just highlighting these areas of imbalance along the way. Another area of imbalance created. Price comes down, it's balancing on itself continually. This imbalance that was created gets balanced. Then price starts moving up, starts rebalancing this area that was imbalanced. Along the way, it's creating points of liquidity. So later, when it runs, it can grab liquidity and pair orders with where it's heading. So on this 15-minute chart, I see an imbalance down here where price never came back down like it did here. See how price overlaps this balanced area? It's coming down and making sure this area is completely balanced. So then we move on to here, and we will highlight this area right in here. Okay, just giving an area of to keep our eyes on. Okay, so now that we have the majority of those marked out, let's go ahead and we'll put the wicks back on. And so now we have certain draws to these imbalances that were created on the chart. The liquidity points are easy to identify because they're typically swing highs or swing lows that are put in, and you can see the market runs them out. And there's points of liquidity that are behind us and points of liquidity that are created as the market moves forward. So now we'll just okay. So we have the market opens at 1700. It comes down and we have a small imbalance in here, and it comes down and it fills that imbalance and then starts working its way back up. And you can see as imbalances are created, it continues to rebalance. And our first imbalance from the previous day gets filled. So this series of down close candles gets filled with a series of up close candles. And we can see that price rebalances this area. And where does it shoot for? An area of liquidity. Okay, so price comes right back up into here. There's an order block right here. And we have an area of liquidity right here where price moves to. And we'll see the reaction of price after grabbing liquidity from above that previous swing high. Runs liquidity once more. Okay, we have some equal highs up here. Just barely runs it, but it also creates another set of equal highs, telling us that this will be an area of liquidity for later on. And as you can see, the confluence of only down close candles in this area, so it's creating a equal high in an area that price needs to rebalance, almost giving you a clue as to where price is ultimately going to end up. Okay, imbalance created, closes it halfway, comes back up to rebalance some of this, and then completely rebalances. And the little area that was imbalanced under here, okay, if we're just looking at candle bodies, we get price close in there. So now you can see that this whole area is balanced. Okay, so here we have that area way back here on the 15-minute chart, small area that was imbalanced. Remember, everything below this was balanced. So what we would want to see is we would want to see that after price has balanced this area, we would want to see price run to a previous point of liquidity that was engineered into the market prior to this getting balanced. And here we have a set of relative equal highs with an area that needs balancing and a swing high above that as well as an area that can house liquidity. So let's take a look at how the market reacts. Okay, so we get a series of down close candles, which fills in that little area of imbalance that was void of any down close candles. Okay, comes back up, rebalances part of this, and comes back down to sweep liquidity one more time. So this is why you would see a failure swing put in, and you would see the second run on buy side liquidity. So price is already grabbing orders long in here as it's rebalancing this area. This is an area that houses liquidity. We have price come back up, partially rebalance this, okay, come back down, grab more liquidity for anyone that's gone long right here and is putting stops below this swing low. And then we should see price leave this area and not return. So now that everything down here has been balanced and we have liquidity being housed up here and we have time of day, New York open. I'm on Central Time, hence the 8:30. So time of day, New York open. We can see speed is now brought into where price is going to deliver to. Okay, partial rebalance. Okay, and there we have it. So this area that was ultimately void of any up close candles, we now have up close candles all through this area. And you can see that the candle bodies close into this candle body to lock in all this area, making it a balanced area. We have price that comes back down and rebalances part of this imbalance, back up into premium to grab orders, and then finishes rebalancing the rest of this and down to here. So just by marking up our charts with areas that mostly consist of either down close or up close candles and looking at areas that have been balanced really well, these become high probable areas to take positions into the opposing liquidity that hasn't been ran yet. And you can see how price reacts after moving into this area. We have a nice reaction all the way up into the opposing liquidity, rebalancing this area. So entries can be taken in here. We could take a bulk of our position off here, the equal highs, and we can start taking runners in here. Minimum of 50%, as it might not rebalance the full thing, might just run these equal highs and turn around. But we can start taking 20% in this area and watch price action. And this would be where my last runner would be taken off, would be the closing out and the complete rebalancing of this blue box. I hope you found this video helpful on the topic of imbalances and liquidity pools. And I hope it brings a little more clarity to the notes that we have written above in the Notion.